Hey everyone, I want to talk about the infinite banking system with Bitcoin. Now, to be honest, I'm actually late to the game for this. I didn't realize it until I had a situation where business got a little tight, things were tapped out, and I started to kind of cut things. And I was like, dude, I wish I could just keep my Bitcoins and not have to sell it because I needed it. And I was like, you know what? Let me look into this DeFi whatever deal, because I want to borrow against it and not sell it because it was going up, right? And so this is kind of how I, figured it out, and then like, man, I should have done this like a year ago. So this is what I wanted to talk about: the infinite banking system, which uses life insurance, but yet you get 5% per year for whatever you put in, and you could borrow against that amount. And supposedly, why you would want to do that is because over time, as you borrow from it, that whatever you borrow from the insurance stays there. So you borrow 10,000, you borrow 8,000 out. That 10,000 stays there, accumulating interest at 5%, no matter how much no matter what. So as you continues to add in and put into it over time, it continues to compound. And in a sense, you're kind of like the bank, where you can borrow money and still make the interest on the 10,000 as if it was still there, even though you took it out. Okay, so this is kind of the same concept with that, and I'll go ahead and start the presentation. I think this is it. Oh, there it is. A little rusty. It's been a while since I've done in Prezi. So we talked about Bill Nash. So the problem is, we have bills to pay, and every time we pay our bills, we don't have an opportunity to invest in an asset. And we played cash flow with Robert Kiyosaki. It's like, hey, always buy assets so the assets can pay for your liabilities and all this other stuff. And so I came across something called Wrapped Bitcoin, which is backed by 1-to-1. It's an Ethereum type of coin that wraps to Bitcoin. Okay, so you basically exchange your Bitcoin or just buy WBTC directly from Coinbase or wherever it is that you get it, and then you use your WBTC to pay your bills from a loan. And the loan can vary between 10% on up to, like, I don't know, I've seen as high as 40 or 50%, but don't let it scare you, because that's just for like the day and it comes back down. And I got freaked out. I was like, wait, this is not working. And then actually it just came down that same day. So it does go up and down, but it's for the day. But on average, about 10% or so. So the thing is like, for people who don't know the infinite banking system, why would you pay interest on your own money? Well, you use your money to pay your bills off. Well, guess what? You lose that opportunity to invest in an asset, like a house that would go up in value or a coin that can go up in value. Now, over time, and you kind of realize when you kind of pay all this money, guess what? You lose the opportunity to buy a house now, because you can't beat that inflation. You're like, dude, I'm trying to save up, paying off my bills and getting out of debt. But dude, now the price is getting higher and higher, and I can't keep up. And so what we can keep up with is basically you can't beat it, basically, unless you buy assets that are able to double and triple over time, and then using those to pay your bills. Okay, and then guess what? Even if it does pay your bills, you get to 68,000 right now. From a year ago, it was 25,000. So if you had put, like, what it is, 5,000. Let's just start with 10,000, just to make it, easy. And you keep adding it to over time. Guess what? That 10,000 became 20,000 over here. 50 over here, and then from 50,000 it tripled again to about 70,000. Okay, so almost like 3 times the multiple. And if that you have that extra money just coming in, guess what? You wouldn't have missed out if you had actually added Bitcoin over here and borrowed from it. So no matter what, even if the interest rate was like 10% to 50% for the year, guess how much it accumulated, right? To pay down that interest, and also fund your lifestyle. Okay. Now, as you're pulling a cash out to borrow and use out whatever, and if you borrow more than 8% of it, and then the interest rate accumulates up to that point, you could get liquidated out of your loan position. But in a sense, maybe that's great, or maybe not. But in a sense, you've already cashed out. You've already used up the extra money, and you had a fun lifestyle, and you've used it, and you actually got out just in time before it came down. And you might as well get out anyway, because if it's going to keep tanking, you might as well get out of position, repeat the process, do it again, keep buying wrap Bitcoin, borrowing for it, and you have an opportunity to ride up another wave. Okay. So in the meantime, while you're doing this, you leverage Bitcoin and borrow, and as the price goes up, it pays for the borrowing expenses, your lifestyle, and it compounds over time. Okay, and so when you borrow it, well, are you constantly buying liabilities? Well, no, we're going to buy an asset with it and trade it. Okay, so this is Aave. If you Google this and use the arbitrage market, because it's a secondary market under Ethereum. They call it level 2 or chain or whatever, but it uses a lot less fees. So I would wrap Bitcoin and borrow USDC. Okay, you can also do Ethereum, but I figured wrap Bitcoin is more of a deflationary asset, so over time it's kind of in a sense forced or has more pressure to go up. And then when you borrow at one and you trade at 1x leverage, because you don't want to liquidate this, because this is borrowed money, right? So you don't want to lose that, because then now you got to pay back the other asset, right? So if you never liquidate, it's gonna wick and whack and whatever else, and it's gonna do what it needs to do. But over time, it's gonna keep on trending up as long as you're willing to hold it long enough. Of course, you don't want to use all of it either, because this is kind of like your checking account. You also have expenses, so I pull expenses out of here, and then I move into my crypto card and use that to pay the bills. Okay, and rinse and repeat. Always buy Bitcoin, borrow from it, pay your bills. That way, at the end of the day, after you pay your bills, guess what? You have some Bitcoin to as an asset for it to opportunity to go up. Okay, and keep a healthy collateral. You want to keep at least don't borrow more than the max, because if it does get liquidated, you get liquidated early. But because you used it, because you needed it, then so be it. But if you're not that desperate, you manage your money well, and you don't spend it all, then you can help the collateral. So even though it fluctuates up and down, as long as it goes more than 50% past your collateral, you should be okay. Okay, and then eventually it'll probably wick back up, because usually it just comes down just to liquidate you and then take off, right? So that's basically the infinite banking system using crypto instead. So instead of getting 5% a year, we would rather go into this market where there's an opportunity to get 100 to 200% for the year. Okay, and constantly buy it with everything you have, salary, income, whatever, and then borrow from it. So that way, it's kind of like, in a sense, buying a house all the time and letting that house accumulate in value, which is through the inflation or whatever, and then you borrow from the house to either buy another house, which you can then borrow and buy more crypto back in, buy more crypto back in. That is possible. They call that leveraged finance, decentralized finance. And then you have more and more, right? But then also at the same time, you have more in a sense interest accumulating that you got to be able to keep up and pay back, and that interest exceeds, then guess what? It reaches your liquidation faster, and then guess what? You're gonna get liquidated if it doesn't grow fast enough to keep up. Okay, so I'll let you manage it. There's opportunities to do it. If you see it, you can do it, but I would rather use Apex Pro to leverage 1x trading, and then just constantly the dollar cost average in. When it comes back up, sell in and sell. Okay. And that way, no matter what, even if it comes down and liquidates hard and fills in, you guess what? You're going to dollar cost average in, buy up these little assets here in the derivatives kind of way, and you accumulate your USDC, and don't use more than half. Now, if I close out all these orders here, I would have about 2,500 left over. Okay, so I have things put in place so that it doesn't exceed that, and if it does hit that, it'll stop creating the entry orders here. And this resets every 6 hours as far as I know. Okay, and then yeah, it resets the rungs and it'll start taking profit when it needs to, especially when it gets in profit. Okay, so this will hopefully bring the profit line down. Alright, so now going back over to that, I think that's pretty much it. I think I've covered this. Buy WBTC, use Aave, pay your bills, use a crypto card to get your bank routing number. You have to call in for that. Then you pay your bills from that credit card from borrowed crypto, gas bills, take the family out, groceries, whatever it is. But that way, at the end of the day, you have WBTC available as an asset to potentially double, and then be able to open up the opportunity for you to use more money and not have to constantly work and work and work because you can't keep up with this inflation. Let WBTC be the inflation hedging coin to help you with that, and then help you get through bills. Now I say that this is not something that make you millionaires overnight or whatever, but I think done over time, as it doubles from 10 to 20, 20 to 40, 40 to 80, you can kind of see how it helps your life get better and better throughout the year as this continuously to accumulate over time. And all the while you're always buying BTC, hedging your positions, adding more collateral to it so that you don't get liquidated, and then managing it properly so that you can pay off your credit cards, and then also trading it to get income from borrowing it and paying off the interest from the trading. Okay. All right, hopefully that has helped you with that. You don't want more information about TradeBot Secrets, there's a link in the description below, and you'll be able to sign up on our website, and I'll be able to have some training on how to set that up, to set this up properly so that you can then trade. Now there's some of this other stuff here that's kind of faster. It is a little bit slower now based on it because I'd rather do it more passively rather than constantly sit here and watch the thing. So it's a little more less leverage, less risk, and that way it's more hands off, and you can focus on other things like spend time with your family and wait for big dips to come down and buy up all the orders, and then reposition at value up, and then go back and sell it back out. Okay. All right. Thanks for watching. We'll talk to you then. Bye.